Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help people get better returns in the stock market. Today, I'm filming from Makati, which is a neighborhood in Manila, the Philippines. And I'm here with my partner and friend, Robb Fahrion. He is the founder and CEO of DKI's marketing partner, Flying V. Robb, thanks so much for doing this. What time is it there in California?
6:15 p.m. So I think we're working off a 16-hour time difference.
Yep, 16. Right. It's 10:15 in the morning here. I've been working in the middle of the night with the time change. But yeah, 16-hour time difference here. But we were able to coordinate, and so glad to be talking to all of you about what we think are the 5 key issues in finance from this week. Robb, why don't you get us started?
We'll dive right in, Gary. This issue called the freedom issue. First point, Argentina. Argentina votes to, and you have hashtag end the Fed, which I'm sure you're very excited to talk about.
Yeah. So DKI readers are familiar with the fact that I am a believer in free markets. The Federal Reserve does not exist to help any of you. It doesn't exist to make the economy better. It exists to enable something called seigniorage, which is the way the government slowly steals from people by taking part of the currency. The advantage of being the issuer of currency means that you can take some of it for yourself. And in old times, back a couple thousand years ago, that was typically done by issuing coins with successively smaller amounts of gold in it or silver, some kind of precious metal. And then, if you take a look at some of our coins in the US, you ever notice, Robb, that some of our coins have ridges on the end? The,
I have
re
noticed.
the reason for that is to prevent shaving. So if you have the ridges, it is a whole coin. What people used to do is they would take a file, they'd shave some of the gold off the edge, and use that, melt it down, and make new coins, right? So seigniorage is the ability to steal. That's what the Federal Reserve does. Argentina has been an economic disaster since socialists took over decades ago. The country is the poster child for inflation, of course, after Zimbabwe and Venezuela. Argentina, every decade or two, has defaulted on its debt. The inflation rate there last year was a little over 100%. It's currently running about 140%. I was fortunate enough to spend a month in Buenos Aires last winter. I do love Argentina. I love the people there. I wish them nothing but happiness and the best. But one of the things I really want to convey to people is how hard the Argentinian people work to preserve the value of their currency. As soon as they get paid in pesos, they immediately start converting it to hard assets, to Bitcoin, to the US dollar. When I was there, the official exchange rate for the dollar was 180 pesos to the dollar. But the blue market there, don't ask me why they call it that, it's our version of the black market, was almost double that. It was about 270 pesos to the dollar.
Wow.
That has since last February when I was there, gone to almost 1,000 pesos to the dollar. So for all of our American friends watching this, raise your hand if you've been irritated by our very high inflation in the last few years. None of us like that. Now try to imagine, Argentinians suffering 140% inflation, and desperately trying to get out of pesos, to get out of their own currency. The government is far too large, and some huge percentage, over 40% of Argentinian citizens, are on government assistance. And their answer to everything is to print more pesos and hand them out. But you can't print wealth, right? You can't just print currency, hand it out, and make everybody wealthy. It simply doesn't work that way. And so their economy has been a mess. And they just had a really interesting election where a candidate, an outsider, he's an anarcho-capitalist, he is an Austrian economist, meaning he's not in favor of money printing, and he wants a smaller government. His name is Milei, and he came out of nowhere and won the spectacular election. He won by a large margin. I think he got something like 56% of the vote to 44% for the opposition. The Argentinian people are voting for more freedom, smaller government, sound money, and hopefully an end to inflation. Milei has said he wants to end the Argentinian central bank. He's going to end their version of the Fed. That's what he says. He wants to put the country on the dollar standard. Now, the Wall Street Journal has been criticizing him and saying it's difficult to move to the dollar standard. And the journal's criticism is reasonable. I would simply say that the status quo, the existing situation, is pretty horrendous for people. So no matter what they do, there's going to be some pain. There's going to be some friction. There are going to be some problems. But, Milley's policies, if he is able to enact them, and the Argentinian people are patient enough to allow these things to work, I think he's got them headed in the right direction.
What does, in terms of short-term, long-term, right? I know you mentioned being a political outsider. That could be a difficult road to obviously get what he wants to get done. Let's say he is successful. I mean, what does that look like in the short term, and then a little bit on the longer term horizon?
Yeah, that's Rob. That's the right question. That's a great question. Basically, first of all, whatever happens, there will be short-term pain. If Argentina's economy is a mess, their companies don't have enough dollars to trade. So their trading partners in other countries don't want to take pesos, because by the time the pesos get there, they'll be worth less. So Argentinian businesses often have to trade with foreign partners in dollars, and they don't have enough dollars. So the whole economy is grinding to a halt as companies don't have parts that they need to import. So the status quo, the existing situation, is horrendous, and there will be pain. That said, converting the economy from a welfare state with where the government is handing out money all the time to more of a free market situation, that's going to come with a lot of pain for other people as well. The short term is going to be very rough. My view is if Milei is able to succeed in his reforms, long term, Argentina has the benefit of great natural resources, a long coastline, an educated population, some really good infrastructure, some good land. And the people there they're terrific. They're smart, they're well educated, and things could be terrific. From a political point of view, I think Milei is going to have difficulty succeeding. And I hate saying this. I want him to succeed. I want Argentina to succeed. Like I said, I love the people there. I wish them nothing but the best. The problem is that Milei is not a political operator. He doesn't come with a party and with built-in support. He's an outsider, and that means he's going to have to work with a status quo establishment Congress. He's going to have to work with the labor unions, and he's going to have to work with a gigantic bloated government sector that will resist everything he wants to do. Now, we saw the same kind of thing here in the United States, where, President Trump, as an outsider, there were times he had support of Republicans, other times he was at odds with them. But the key thing is he was opposed by the administrative state. He was opposed by the people in the various government agencies who are in favor of larger government. Now, I understand the people listening to this, some of you are, MAGA President Trump fans, and some of you, think he's the worst thing ever to happen in the history of Western leadership. And I'm not interested in discussing that or challenging anybody's opinions on that. The point that I'm making is that he was opposed by the bureaucracy, and that made it difficult for him to implement some of his policy plans. I think Milei is going to be facing the same thing. I'd love to see Milei succeed, but he's going to have to find a way to negotiate with people who are dead set against him. And so we'll be watching this closely and hoping for the best. One other thing that I'd love to add here is, if we look at North America, which has typically been the bastion of economic progress and freedom, we see Canada and the United States suffering from an overabundance of a regulatory state. Mexico is having issues with their drug cartels, who in parts of the country actually run the country. And then when we look at South America, we see El Salvador switching to the Bitcoin standard. We see Argentina voting for an anarcho-capitalist and wanting to end their version of the Federal Reserve. And there are a couple of other countries in South America that are moving away from socialism and toward greater economic freedom. And so we are at a point where we're actually looking at a change in freedom and polarity, where North America is becoming more regulated and more authoritarian, and South America is trending more towards freedom and individual determination and more of a capitalist society. And, these kinds of shifts have happened throughout history, but they're relatively rare. And so for everyone watching this, I would encourage you, just watch it. This is a fascinating moment in history where you can actually see economies changing and the people making decisions to vote for more or less government, for more Federal Reserve control over the economy or more freedom. And, whichever side of this you're on politically or economically, it is going to be a fascinating thing to watch.
Yeah, definitely interesting developments coming out of Argentina. Moving to point two, talking NVIDIA, they recently announced earnings, came in a little bit above $4 a share, beating expectations of $3.36. Headline here is NVIDIA earnings spectacular, but the market seems indifferent.
Yeah. So, one of the big stories in 2023 in the financial markets has been the great success of our indexes. The S&P 500 is up a lot, the NASDAQ is up a lot, and people say, wow, the market is up. And, my answer to that, and I'm not the only person to notice this, is sort of, right?
Mm-hmm.
So what we've had is, it used to be the FANG stocks and the FANG stocks and all the variety of tech stocks. And this year, they've been rebranded as the Magnificent Seven, where 7 gigantic mega cap tech companies have really provided almost all of the gains in the market indexes. And when people say the S&P 500 is up, yeah, it is, but it's 7 companies that are responsible for almost all of the gains. This year, the largest contributor to the index has been NVIDIA. Now, in fairness to NVIDIA, their performance has been spectacular. They make the best graphics chips in the world. I have a high-end NVIDIA graphics chip in my computer at home. And the reason these chips are so popular right now is because graphics chips are very good at parallel processing. And it's just a fancy way of saying they do lots of calculations simultaneously. The reason that matters is that kind of capacity is ideal for artificial intelligence applications. And that's where the money is being spent right now. And so every quarter this year, NVIDIA has crushed earnings, blown out sales numbers, and given guidance far, far, far above where analysts had been expecting. And to their credit, they're doing it on fantastic fundamental performance. And so, we saw they had a blowout quarter. They crushed earnings expectations by more than 30%. The new guidance for revenue for next quarter was more than 20% above expectations. And it was just a fantastic quarter that confirmed the bull thesis on the stock.
With that, Gary, basically, as far as I understand, there's already been that built-in expectation in the stock price, which is why you saw that the stock price actually moved down, I believe, the day after, correct?
That's right. Yeah. And even in the aftermarket right away. And that's something worth watching. And so, one of the things that we do as stock analysts, as stock pickers, it's not just figure out, is this a good company or a bad company? That's important, but it's not the whole story. Part of it is figuring out valuation and what's incorporated in the stock. And so NVIDIA announced this fantastic quarter and the stock promptly dropped. And, people were saying, wait a minute, what's wrong? They beat earnings expectations. They raised revenue guidance. And it's true. They did all those things. But, the stock at times this year has traded, at more than 50 times sales and more than 100 times earnings. And there's just a multiple. There's a price for the company where all of that good news is incorporated. And so even though NVIDIA had a great quarter and results were fantastic, people's expectations were just so much higher that the stock actually fell. There's nothing wrong at the company, but it also doesn't mean that NVIDIA has unlimited valuation, right? So people can argue whether the company's worth, $1 trillion or $2 trillion or $3 trillion, but it's not worth $30 trillion. There's just a price where no matter what the company announces, the stock is going to go down, and that's what we saw. And so that's how we explain the title, right? They had a great quarter, but the market said, yeah, we expected this, and the stock has come down.
Yep. LVS, as we've talked about in recent 5 Things, Las Vegas Sands, talking about that again in this week's 5 Things. Macau visitation up 19%, continues to climb for point number 3 of our 5 Things.
Yeah, so uh, Macau suffered from 3 years of lockdowns. The Chinese government kept their citizens locked down for longer than basically any other nation in the world. And they started to open up much more enthusiastically at the beginning of 2023. And so there's been a lot of concern that the China is starting to face some economic difficulties of their own, and people are saying, "Hey, the economy isn't great. People aren't going to gamble." And our response to deep knowledge investing has been, "No, you don't understand, right? The Chinese people love to gamble. For them, it's like Americans love going to concerts or football games. Those are the things we spend money on and travel." The Chinese people really like going to casinos and gambling. And after 3 years of not gambling, they have what DKI gaming advisor Howard J. Klein calls pent-up bankroll, right? they got money in their pocket and they want to go to the casinos. They're starting to do that. Now, some of the October number, some of that growth is a little misleading. Let's talk about why. In September, there was a typhoon that closed the casinos briefly, and so September was a little weaker than it should have been. October, on the other hand, had the huge Golden Week holiday, and because of the timing of it over a weekend, the Golden Week holiday was actually a little longer than normal. And so we had an unusually strong October versus a slightly weaker than normal September, and so we get some of this growth. We will get the November gross gaming revenue number coming up very soon. Our expectations is that they're good. And there's actually reason to believe that by 2024, Macau gross gaming revenue and Las Vegas Sands performance there will start to rival the pre-pandemic numbers. They're making a phenomenal comeback. Now, one of the things that happened during the day there in the US, overnight here in the Philippines, is the former chairman and CEO, Sheldon Adelson. Unfortunately, he died a couple of years ago. His widow Miriam Adelson, has announced she's going to sell $2 billion of stock in the company to buy a sports team. There's already a post up on that. And what we're doing with the stock up on the Deep Knowledge Investing Premium blog for our premium subscribers. And, for those of you who find the topic interesting, I would think it's a pretty good bet that this is something that we'll be talking about in next week's version of the 5 things.
Do we know which team?
It has not been announced yet. But
interesting.
Yeah, she needs $2 billion. That means it could be an NFL team. It could be an MLB team.
A lot of options.
What's that?
Lots of options.
Yeah. She also has great ties to Israel. And so, there's the possibility that it could be a European soccer franchise, or as they call it in Europe, a football franchise. I was talking to Howard J. Klein early this morning, or, late for you guys. And, we were debating whether it would be an NFL team or a Major League Baseball team. We just don't know at this point. But again, if this is interesting to you, tune in. I think there's a high probability, Rob, that we will be discussing this issue in much greater detail next week. And again, for our DKI Premium subscribers, please check the blog. There's a post up already on this.
Yep, no doubt. Always on top of it, Gary. Average wager up 37% from 2019 pre-pandemic levels.
Yeah. And that's
anything to add to that?
Yeah, let's talk about that for one quick second. That is the proof of pent up bankroll, right?
Right.
So what we're seeing is that visitation is growing very quickly, but visitation is not back to pre-pandemic 2019 levels. And yet the revenue numbers are starting to approach, the gross gaming revenue numbers are starting to approach 2019 numbers. The reason for that is pent-up bankroll. People are coming into the casino with more money in their pockets, and the average bet is up huge. That information was announced by one of the Wall Street sell-side firms last week. I'm just going to point out that our DKI's gaming advisor, Howard J. Klein, started talking about pent-up bankroll with me 2 years ago. As usual, he is on top of it. The best gaming analyst I know, and the two of us love getting on the phone and talking about the gaming companies. One other thing worth mentioning while I'm here in Manila, I want to thank Andrew Scott and the team over at Inside Asian Gaming. It's the best publication to cover gaming in Macau and the Philippines and Singapore, all of the Asian gaming hubs. And they've kindly invited me to their Macau After Dark event here in Manila later this week. And so I will have the opportunity to meet the people who follow the stuff here and get to know some other Asian gaming analysts while I'm here. And so that should be a fascinating experience. And just, Andrew, thank you. And thanks to Inside Asian Gaming for the invitation. I'm looking forward to being with all of you in person in just a couple of days.
Awesome. DKI always a step ahead for sure. So
we will travel around the world.
That's right. Whatever it takes.
Whatever it takes. That's right. We are for our subscribers. There is nothing we won't do.
Point number 4, University of Michigan. I know one of your favorite universities, a pretty dang good football team. I know you're probably excited about that right now. They've recently reported the November index of consumer sentiment. Consumer sentiment is down and inflation expectations are up, which makes sense.
Yeah, right. Those two are tied. But, let's get to the really important news. Michigan versus Ohio State in the game over the weekend. As usual, my dedication is not just to DKI subscribers, it's to my alma mater. That game started at 1 a.m. here in Manila and ended about 5 a.m. And I'm in a great apartment here in Makati. And at 5 in the morning, I was running around, jumping up and down like a lunatic after, a big win over rival Ohio State. And boy, was that fun.
Yeah, we might have to blacklist this version to anybody in the Ohio perimeter. Not too happy.
Yeah, I was, believe me, I was getting hate messages on Twitter, including somebody who was, like wishing for me to get into a car accident. They got a little wound up over this one.
Football definitely brings out a lot of reasonability, right? With the fans.
Yeah, it's interesting, Rob. I frequently will write things that are, negative about the Federal Reserve, questioning the spending policies of our Congress, and everybody, they kind of absorb that. People might agree or disagree with my view of economics or the markets. But, when it comes to football, that's where I get the hate mail. And,
there you go.
I listen, be mad on Twitter if you want. That's your right. It's your right to be mad on Twitter. But anyway, after, running around like a lunatic and being very excited for this phenomenal win, I'm happy about that. Let's talk about the University of Michigan consumer sentiment and inflation expectations. So earlier this week, there was news out of the White House that they were bragging that inflation is down 65%. And, our response to that is that's technically true, but very, very misleading. And the reason is, what we've seen is inflation from last year at 9%. Let me rephrase that. The CPI, the Consumer Price Index, which hugely understates inflation. The CPI is not accurate. But the Consumer Price Index understates inflation. Last year was at 9%. And now we're down to the headline number being 3%. The core number is 4%, which is still double the target, when the target itself is still too high. So yeah, inflation is down, but there's a difference. We've talked about this. We talked about this last week. There's a difference between disinflation and deflation. So, if you're listening to this and your grocery bill has gone up and your rent has gone up and your gas prices have gone up and, you're struggling financially, I don't know that the White House coming out and telling you, hey, you're going to pay even more next year, but the rate of change is lower. Like, you care about that if you're a finance guy, and you care about that if you really love your high school calculus. But for the American people, it really just means prices are still going up. Now, at this point, the inflation expectations for the consumer have risen. And what that means is that the American consumer is looking at the CPI, the Consumer Price Index, and saying, we don't believe it. We don't believe it. It's too low. Inflation is more than 3%. We expect it will continue rising. I happen to agree with them. I think this is a situation where the wisdom of the masses is correct. In this case, I will take the opinion of 330 million Americans over a few dozen experts in the Federal Reserve. I think this is a case where the people have it right. And unsurprisingly, when their home budgets are stretched and they expect that there will be more inflation, consumer sentiment will go down. And that's exactly what we're seeing. And, we believe that those two things are linked. The more people think their future prices are going to go up and the tighter their future finances are going to be, the less enthusiastic they are about the economy. And this is a completely rational response. And, unfortunately, I think the people have it right on this one.
Keeping in that same theme, kind of just segueing right into point 5, disinflation, deflation. We had durable goods, new orders, report, percentage change month over month, down, and then you highlight sort of. So definitely needing some clarification there.
Yeah, and you're right, and that clarification is really important. So first of all, let's just talk about what durable goods are. The American economy, it's a consumer-led economy, and we're really big on services, right? The things that we do for each other as opposed to goods. Goods tend to be things that we're buying from other places. We've outsourced a lot of our manufacturing. This has caused a lot of pain in certain parts of the country. I grew up in the Midwest, and used to be a manufacturing hub for the world, and a lot of those jobs and that production has moved. So, durable goods are like, the big ticket items that people buy. And we've talked about a reduction in demand for those goods. And part of it is because those are things that people finance. And as interest rates have gone up, right, financing expenses are up, it's made these goods more expensive. And so the headline number from last week was the October durable goods orders came in at negative 5.4%. Now, for people who don't spend all day looking at economic news, I'm going to tell you that is a big decrease. A 5% decrease, 5.5% decrease, that's a really big number. And a lot of people saw that and thought, oh no, right? The economy is crashing. We're not buying stuff, and it is a forward sign of a weaker economy. Now, Rob, you correctly said, hey, wait a minute, there's a sort of, this is complicated. And now we're going to go to the analysis from another DKI board member, our economist, Michael Shedlock. He goes by the name Mish. We are so cool at DKI, our economists, they go by a one name, right? There's Cher, there's Madonna, and there's Mish. And, kidding aside, Mish is a phenomenal economist. I love talking about ideas. He and I are on the phone all the time. He's smart. He does phenomenal research, and puts together some terrific graphs. And he correctly pointed out that there's an alternate explanation for that big negative 5% print. And the reason is aircraft orders. So, Rob, aircraft orders are huge and inconsistent, right? Mm-hmm. An airplane could cost hundreds of millions of dollars if companies are ordering 10 at a time or 24 at a time or 50 at a time. It's enough to move the numbers for an entire country, right? And there are multiple aircraft manufacturers in the world, but the two really big ones right now are Boeing in the United States and Airbus in Europe. And so, when Boeing has a lot of orders, it is enough to move this number. And the aircraft orders were down 50% in October after being up almost 100% in September. So there's a lot of noise in the numbers. Now, Mish, being the phenomenal economist and analyst that he is, separated it out, put together a great graph, and here's what he showed. If you exclude the one-time, huge decrease in aircraft orders, durable goods orders were actually flat. And so it's not as bad as it seems. And so yet again, one DKI theme for the last year and a half has been inconsistent economic data. We're seeing consumer expectations for inflation go up. We're seeing people's optimism about the economy go down. It looked like durable goods orders were down. But backing out the aircraft orders, the orders, this activity is actually holding up. And so, there's not a crash. And the reason people were excited about this is if you're in the camp that's hoping for or expecting that the Fed will be able to guide us to a soft landing, meaning get us to a point where inflation subsides, they can stop raising interest rates, but without crashing the economy, this would be the kind of data that would support that thesis. Now, I'm going to point out it's 1 month's worth of data. Don't get too excited or too depressed one way or another. These things take a long time to play out. But, for people in the soft landing camp, when you look at Mish's analysis on this, there is evidence to show that we could be heading in that direction.
Question, and I know not everyone has the chart in front of them, but you see in 22 what looks to be a pretty stable chart in terms of percentage change versus in 23, we get a lot bigger swings, right? Any comment or reasoning, just out of my own curiosity, for why we see those bigger swings in during this year, actually going back to about a year from now?
Yeah, so part of it is the recovery from the pandemic years where there was just a lack of activity in a lot of situations. Companies couldn't get parts. There were shipping issues. There's a point a couple of years ago where there was a line of ships outside the port of Los Angeles.
Right.
The port had tons of goods, literally overflowing there.
It was, yeah, I'm right there. We down in San Clemente, which is about 40 miles from Long Beach Port, you could see them off the coast just lined up. It was actually spectacular to see that.
Yeah, the ships were lined up. The shipyard was full. They had to start charging people to store the goods. There were lines of trucks waiting to pick things up. And so, it takes a while to sort this stuff out. And then, we also had a big change in demand. So, let's go back a couple of years ago. Everybody was, locked down at home, spending a lot of time at home, and they used that and the pandemic funds they received to do a lot of work on their houses. People bought, new furniture, new home theater systems. They bought, toys for their kids, video game systems. For a while, there were a couple of years when you couldn't get a PlayStation 5, right? Like Best Buy couldn't keep them in stock. And
Right.
so, people they were doing additions onto their homes and remodeling. They're thinking, well, wait a minute, I'm stuck here. We're going to make our home really nice. And then, when the lockdowns ended, people started to focus much more on doing things outside the home and going more towards services. So dining out, vacations, going to Las Vegas and gambling, getting on cruise ships, which, those stocks have done really well. Tons and tons of concerts, right? Taylor Swift had her $1 billion concert tour. That wouldn't have happened a couple of years ago. And it's not a knock on Taylor Swift or, her business acumen. Is that the economy changed and she wisely put herself in the position to take advantage of it. So, sporting events. So we've had this shift from massive amounts of demand for goods to a reduced demand for goods and much greater demand for services. And, the consumer can switch very quickly, but supply lines and transportation lines, they need a little more time. They need some months or a year to adjust. And so I think that's what you're seeing there in the numbers, and why when there's a lot of demand for goods, you see consistent goods demand. And then when you have a shift, that you see more volatility as supply lines try to adjust to changes in demand.
Great. So that'll wrap it up for this week's 5 things. Again, premium subscribers receive the 5 things. Opening bell Monday mornings. Free subscribers also receive these 5 things, but a few days late on Wednesday. As always, appreciate everyone tuning in. Gary, anything fun planned while you're away, or any parting notes from across the globe?
Yeah, so I'm just getting myself settled here in the Philippines. It's been really nice so far, but obviously, there's a lot going on the economic side. So it's actually been a lot of work. I had a 15-hour workday yesterday and then was up working from 2 to 3 in the morning on some news. But at some point, I'm going to make my way out of Manila and get to Cebu or Boracay. My apologies if I'm pronouncing that wrong. But I'm going to try to get some time at the beach. And I've heard wonderful things about the beaches here at the Philippines, good places to go surfing. I'm a beginning surfer, and so I'll find a place to get some lessons and hopefully come back uninjured.
Very good. Gary, thanks for your time as always. And yeah, looking forward to next week.
Thanks, Rob. Great speaking with you as always, and looking forward to speaking with everybody about next week's 5 things. Thank you.
Thanks, everyone.